Let's talk about your retirement money, Social Security, the financial backbone for millions of Americans. For decades, it's been a lifeline, helping people cover essential expenses and maintain their independence as they age. But as we look ahead, the landscape is shifting. With big changes coming in 2026, understanding the new rules is more important than ever. These updates could affect how much you receive each month, how your benefits are taxed, and even what you pay for healthcare. Nearly 74 million people rely on Social Security, and the system keeps evolving to meet new challenges. Whether you're already collecting benefits or planning for the future, staying informed is key. Today, I'll break down what's changing, payment adjustments, tax updates, and more. We'll look at how these shifts could impact your day-to-day finances and long-term plans. We'll cover the cost of living adjustment, insolvency forecasts, Medicare premium hikes, and what these mean for your wallet. Plus, we'll discuss new rules that could affect your eligibility and planning. There's also a new tax deduction on the table, which could help you keep more of your hard-earned money. Understanding these details now can help you make smarter choices later. Whether you're retired or planning ahead, these updates will impact your budget, your healthcare, and your peace of mind. It's never too early to prepare. My goal is to make it simple, clear, and actionable, so you can take control of your financial future with confidence. No jargon, just what you need to know for 2026 explained in plain language. I want you to feel empowered, not overwhelmed. By the end, you'll understand how these changes affect your income, healthcare, and taxes, so you can make informed decisions for yourself and your loved ones. Think of this as your essential briefing for the year ahead, a roadmap to help you navigate the Social Security shakeup with clarity. Let's get started and make sure you're prepared, not surprised, when these changes arrive. The right information is your best tool for a secure retirement. Let's make sure you have it. First up, the 2026 Cost of Living Adjustment, COLA, is a 2.8% increase. For the average beneficiary, that's about $60 more per month. It helps offset rising costs, but it's not a windfall. Here's the catch. That small increase could push some over income limits for programs like SNAP or Medicaid. Losing those benefits could cost you far more than the COLA adds. So check the 2026 income limits for any assistance you receive. Don't assume the extra money is all gain. Do the math. If you're at risk of losing other support, plan your budget now. The COLA is helpful, but it comes with strings attached. Stay informed to avoid unpleasant surprises. Preparation is key. Let's clear up what insolvency really means when it comes to Social Security, because there's a lot of confusion and fear out there. Insolvency doesn't mean Social Security checks suddenly stop coming. It simply means the program won't have enough in its trust fund to pay out full promised benefits. If the trust fund runs out in the mid-2030s, benefits would be reduced by about 20–25%, not eliminated. That means you'd still get most of your monthly payment, but not the full amount you might expect. Social Security would continue to pay out what it collects from current workers' payroll taxes. So, while the program would be under strain, it would still be able to cover the majority of benefits for retirees and people with disabilities. For retirees, a 20–25% cut is significant, but it's not a total loss. It's important to remember that Social Security has never missed a payment in its history. The problem is real, but it's also fixable. Congress has several options to shore up the program, like raising the retirement age, increasing the payroll tax rate, or changing how benefits are calculated. Lawmakers could also consider new sources of funding or adjust the cap on taxable income to bring in more revenue. For 2026, your benefits are safe, and there's no immediate threat to your payments. But it's wise to stay informed as the debate continues. The sooner Congress acts, the less drastic the changes will need to be, and the more secure your future payments will remain. Don't panic, but do stay engaged. Attend community meetings, ask questions, and make your voice heard. Make sure you know the facts, not just the headlines or rumors. Understanding the real situation helps you plan and advocate for your future. For now, your 2026 payments are secure, so take a breath, stay informed, and know that solutions are possible. Medicare Part B premiums are jumping about 10% in 2026. If you paid $174.70 a month in 2025, expect around $192.20 in 2026. That COLA increase? Nearly a third could vanish to cover this higher premium. Rising healthcare costs and more retirees are driving this hike. Review your coverage during open enrollment. Don't just auto-renew. Medicare Advantage plans might offer better value or extra benefits. Compare your options carefully to protect your wallet. The premium hike is unavoidable, but you can control your plan choice. Act before December 7, 2025 to make changes. Don't let higher costs catch you off guard. Smart choices now can save you money all year. Here's some good news: a new tax deduction for those 65 and older. If you or your spouse have reached this milestone, you could be eligible for significant savings when you file your taxes. Thanks to a recent law, you can claim up to $6,000 extra on top of the standard deduction for 2025 taxes. This is a substantial increase designed to help seniors keep more of their hard-earned money. That means a single filer over 65 can deduct up to $23,750. This is a big jump from previous years, and it can make a real difference in your financial planning. Married couples where both spouses are over 65 can deduct up to $46,700. This higher deduction can be a game changer for couples living on a fixed income or retirement savings. This can drop your taxable income and potentially lower your tax bracket, which means you could owe less in taxes and keep more in your pocket for the things that matter most. For example, a 68-year-old with $40,000 income could see their taxable income fall to $16,250. That's a dramatic reduction, and it could mean you qualify for other credits or benefits as well. That's real savings, possibly hundreds or even thousands off your tax bill. Imagine what you could do with that extra money: travel, hobbies, or simply peace of mind. This deduction is available through 2028, so take advantage while you can. It's a temporary benefit, and planning ahead will help you maximize your savings before it expires. It's not automatic. You must claim it on your return. Make sure you check the right boxes and provide the necessary information to get your full deduction. Remind your tax preparer or double-check your software. Even professionals can overlook new rules, so it's important to be proactive and confirm you're getting every dollar you deserve. Don't leave this money on the table. Missing out on this deduction could mean paying more than you need to, and every bit counts in retirement. Every dollar saved helps your retirement go further. Whether it's for daily expenses or a special treat, these savings can add up over time. Plan ahead for tax time. Review your documents, keep track of your age and filing status, and talk to a professional if you have questions. This is a rare win. Make it count. Take full advantage of this opportunity to boost your financial security and enjoy your retirement years with less stress. Social Security taxes can be confusing, but the rules aren't changing for 2026. Whether your benefits are taxed depends on your combined income, your AGI, non-taxable interest, and half your Social Security. If you're single and under $25,000, your benefits aren't taxed. Between $25,000 and $34,000, up to 50% is taxable. Over $34,000, up to 85% is taxable. For couples, the thresholds are $32,000 and $44,000. Remember, 85% taxable doesn't mean 85% tax, it's just added to your income. SSI benefits are never taxed. SSDI and retirement benefits follow these rules. Know where you stand to avoid surprises at tax time. Understanding these basics helps you plan smarter. To get Social Security retirement, you need 40 work credits, about 10 years of work. You can claim as early as 62, but your check is permanently reduced if you claim before your full retirement age, 66 or 67 for most. Waiting until 70 maximizes your benefit, up to 75% more than claiming at 62. Your payment depends on your earnings and when you file. Monthly checks range from $800 to over $3,000. Check your Social Security statement for personalized estimates. Timing your claim is one of your biggest retirement decisions. Make it with the facts, not guesses. Social Security isn't just for retirees. SSI and SSDI are vital safety nets. SSI helps those with little income or resources, regardless of work history. SSDI is for people who've worked and paid Social Security taxes, but can't work due to disability. SSI is needs-based. SSDI is work-based. SSI recipients often get Medicaid. SSDI recipients get Medicare after 2 years. Both programs support millions facing hardship. Know which program fits your situation. They're lifelines when you need them most. 2026 brings a modest COLA, a valuable new tax deduction, but also a sharp Medicare premium hike. Don't assume you'll pocket the full COLA, factor in higher healthcare costs. If you get income-based aid, check if the COLA puts you over eligibility limits. Claim the new senior deduction at tax time. It's not automatic. Review your Medicare options before open enrollment ends. Stay proactive. Budget, compare plans, and keep up with Social Security news. Your financial security depends on informed decisions. Don't just react. Plan ahead. The changes are manageable if you're prepared. Stay informed, and you'll protect your retirement future.